Hi, this is Anthony Parent of IRSMedic. I want to thank you for joining us today. I have with me John Richardson. We are going to go and dissect the oral argument in Moore versus U.S., which we live streamed last week on December 5th, and it was quite a long hearing. It was, for me, incredibly depressing to listen to because we had so cavalierly, everyone's so cavalier about this entire thing about seizing people's money. And, really the tone of the Solicitor General was incredibly grating. She was very glib about the whole thing. And, we have a tax system that, at the end of all of our tax system comes a gun. And that's just a fact. Our tax system is ruled by threats, intimidation, and actual violence. So to me, it's no laughing matter. And there was multiple times where they were laughing completely inappropriately. And really what caught me is afterwards, I was thinking about it, and it was just so horrific. It's this is what the transition tax really is. It is something what I would call vicarious realization. That is, in the Moore case, what we had was that we had shareholders of a corporation who pay taxes on their dividends, but the transition tax wants to tax them on the corporate earnings, which they never receive, nor do they have a right to. That if they took that money, if they took their pro rata share of shareholders' equity, if they had the ability to take that out of the corporation, they would be found guilty of embezzlement because it's not their money. Yet that is exactly the thing the IRS has been taxing, and the Solicitor General was arguing so passionately for, and rather glibly for, is the income of the other people. And so, really, this is the problem that we have. Everything that the IRS does is a trial. Everything they do overseas is a trial balloon for what is coming to America. And if you don't believe me, listen to this. Many people don't know this is coming on, John. I don't know if you know this, John, but there's a new FinCEN requirement. You wouldn't believe it. The Financial Crimes Enforcement Network has a new filing obligation. You wouldn't believe it, but guess what? It's not for people to report their foreign bank account, as I'll say, but rather, guess what FinCEN is now? If you have an LLC, nearly anything that's registered with the Secretary of State of any state in the U.S., guess what? There's a new form to file. It's called a beneficial owner informational form. And guess what? There's a $10,000 penalty if you don't. And so, like we've been saying, the FBAR is just a trial for balloon for what's coming to America. And here it is. It is here. So here we have the government taxing income people overseas, or people with foreign investments don't have, laying the groundwork for the complete seizure of 401ks domestically. Here it is. If a corporation makes money, hey, anyone else could be taxed for it. Really, that's what the transition tax is all about. So it is incredibly depressing to see how far off the rails the 16th Amendment has gone, to see how depraved the government is. And now hopefully I'm setting up my good friend John Richardson pretty well, because John wrote an article about this in his own debriefing. The sheer depravity of this thing. It's so heavy in ugliness and dehumanizing. And this massive government thing is just like more and more and more. And we don't care who has the income. We could tax you for it. And that is what this is about. John, good morning to you. How did you do after that? How did you do emotionally after that oral argument?
I will say that that was a week ago. It was an exhausting day for me. It was absolutely exhausting. I mean, we started in a half hour before the thing,
Yep.
listening to it and the discussion after, and then I did a podcast with Laura Snyder about it after that. I mean, it was a really exhausting day.
Yeah.
Trying to interpret what was going on. But I will say this, it didn't sound great, but after I read the written transcript of the thing, I'm not as sort of pessimistic as I was. There are certain judges who, very, very clearly, were pushing back on the ramifications of the U.S. government, the Solicitor General's argument. I mean, I think the high point of it was when she said, "Well, hey, we're the government. We can tax people just for existing." I mean, what does that mean? It means the position of the Biden administration is that American citizens are the property of the US government. I mean, that's exactly what it is. And I think,
Which, part of me, I'm outraged, but then also she said it out loud. Now the Solicitor General is just the avatar for the government. She's not the entire government, of course. She actually said it out loud, like, well, we can do whatever we want. And that was sort of depressing because that does reflect the government's belief. And that you're able to say that's sort of like, well, I appreciate the honesty. I appreciate the honesty of you saying what you believe the government is, but the fact that you're allowed to say that and not be taken away in handcuffs, that's really alarming. That's really alarming and depressing. That we can say, yeah, we're the government. We're just going to run over people, and whatever happens, so what? It's just taxes. So shut up.
well, the position of the Biden administration on this is that basically, when it comes to taxation, the only possible limitation on taxation would not be a 16th Amendment limitation, but some kind of a due process limitation. And this was explored during the hearing. By due process, I mean, the retroactivity. Justice Kavanaugh raised that a few times. The issue of attribution. Is it reasonable to, at what point does it violate due process principles to attribute the income of a foreign entity to an individual? So, it was interesting, and after having read the transcript, I realized how much I missed listening to it. I think I'm a person. I learned something about myself that I do much better absorbing information when I read it than listen to it. That's just sort of a moment of self discovery I had, last week to this. But
Well, now that you said it, because I think I do better. I do better understanding things after you explain it to me, John. So I think because I was kind of tuning out during the due process arguments, and now I kind of realize why. I realize why I've tuned out during the due process argument, because when it comes to tax, due process just doesn't apply. Due process doesn't apply. Hey, look, we have a whole Bill of Rights that's right there that says, hey, these are all the rights you're entitled to. They're denied to you. Unreasonable search and seizure. What happened to that? Everything is like, well, that amendment doesn't apply if we're talking about tax.
well, that's though because the tax code is the Constitution.
Right. So that's the point. It's like
Fourth Amendment constitutional provision would be subject to the tax code.
right.
Okay. If you're not dealing with tax, so the hierarchy in the United States is this:
Right.
taxation is at the top.
Number one.
We're
That's our
not
Constitution.
talking taxation. Then you move down to the Constitution.
Right.
Okay. And so forth on down. But what's really fascinating about this case, and I think possible grounds for optimism down the road, is that there appears to be a recognition that there might actually be a due process restriction on the right to tax in certain ways. Now, I don't know that they're going to get it this time. As Justice Alito said, "Well, hang on, isn't this just an economic reason? So it's just rational basis. What kind of protection is that?" But
And yeah, and just and that was something interesting that did pop up in there because in law school, this is what we learn in constitutional law. There's 3 standards of review depending on what rights are effective. It's a fundamental right, you get strict scrutiny. What's the one that gets intermediate? And then there's rational basis, which is just like, well, you made a complete sentence.
Anybody could make up a reason.
Anyone, right? Rational basis. And so that was, and perhaps that was a trap that Justice Alito led to say, oh, okay, so you guys went for rational basis, okay, but this is affecting people's, this is something that could be impacting a fundamental right, that is the right to due process. So that might go somewhere.
Well,
and
I think possibly the seed was planted. I mean, both Justice Gorsuch and Justice Alito, were very, very clear that the position of the Solicitor General was that there is no limitation whatsoever, when it comes to taxation. And they asked this question not so much in terms of the attribution issue, but just by giving a very, very simple example. Could Congress tax people's 401ks just based on appreciation alone? And, the answer was absolutely yes, we always could. This is not new. Then she says, this is fascinating. He says, but we would never do something like that. And, 5 days earlier, good old Ron Wyden introduces what he
Yeah.
calls the billionaires tax, which is an attempt to enact the Biden Green Book. One of the things the Biden Green Book does is exactly what Justice Gorsuch and Alito were asking about, namely taxing the appreciation of the 401ks. So make no mistake about it. No mistake about it. The position of the U.S. government is as follows. The Constitution is the United States. The citizens are the property of the United States. The government can do anything to the citizens. That's it.
And very out in the open. So I mean, kudos to the Solicitor General for stating how the government really
I
how it really
know.
looks.
The amazing thing is that people are going
Yeah.
to go out and vote for the Democrats after.
Well, and that's and as as I'm seeing going on here is this coordinated campaign against the Moors by people such as Robert Reich.
Oh my God.
I mean, he is truly one of the most obnoxious people on the planet. And anyone listening to him really needs to think about something about this. Ron Wyden, or I'm sorry, Robert Reich is out there claiming that a victory for the Moors would be a victory for the billionaires. Really curious reasoning on that. I can't figure that out.
He doesn't understand a damn thing about it.
He doesn't, and he's just a paid shill. He's obviously
He was
he
secretary in the Clinton years, I believe.
Yeah.
He was a
Yep.
Clinton Democrat. But I
Yeah.
mean, the problem with a guy like this is he's got a large following. I mean,
Yeah.
seriously, he either doesn't understand this at all or he's completely out of his mind. I saw, in that video that I think I sent that to you yesterday. He's going on about how, somehow Alito and Thomas, shouldn't be able to hear the case.
Yeah.
I mean, he's denying that any of this other stuff is an issue at all.
Right.
And, I can tell you that I would much rather have, let's assume that Alito and Thomas are corrupt, whatever.
Absolutely. Yeah. Sure.
On that. But let's assume I would much rather have a corrupt couple of judges, all right, than a system of government that believe it owns its citizens.
Yeah. Yes. Much more preferable. I mean, he, and I would just say, I think, he's like, oh, billionaires are getting it. Well, here's folks, just think about this. Who's paying Robert Reich to do this? Is he just doing this project that's been going on, as far as I could tell, goes back to March of this year, probably started earlier, or rather would it be someone like, some billionaires like, okay, I need to find someone in Washington who has a following. Let me just pay him. And it'll probably just be his virtual assistants who post this stuff out. He probably isn't even engaging in anything. I don't even know if Robert Reich is even home. It's somebody else doing it. He's just probably paid off. I mean, it's just so utterly depressing to see how everything is flipped on its head. And people are demanding billionaires get hit. Well, who's writing the tax code? Who's writing the tax code? Who has the money to lobby to get the tax code written? Who got the payoff? Who got the benefit of the MRT? And it wasn't individuals; it was large corporations. And yet Robert Reich doesn't mention that. He doesn't want to mention the truth whatsoever. He just wants more and more and more by whoever is paying him, which we don't know. We don't know who is paying him to get this out there. So let's move on here, because this is, and I just, get to your point here, where we said, your disappointment, there was no discussion of the fact, save a brief reference by the Solicitor General. And I'm saying that because it was not the Moors Council, to the fact the Moors are individuals and treat individual shareholders different than corporate shareholders and under the MRT. This is exactly the point. What we're talking about is the intentional confusion over this to make it look as if a victory for Moore would be a victory for something other than individuals. That's what I mean. They will. This is the most important thing. Corporate shareholders did not have this transition tax. Individuals did. Yeah. That is a huge distinction, and it destroys the whole working class BS narrative of people like Robert Reich, the actual facts. And so it is a disappointment that the Moores' own counsel did not drive home this point, that it was the individuals are hammered.
Well, I think, when you look at all this, I mean, what you're seeing with Moore, the whole stuff in the media and that, is the fight is really about who gets to define the narrative here, right? And you get all these Looney Tunes out there who are saying, "Oh my God, this is about billion." I mean, this is just absolute madness. I mean, it's so
Yeah.
stupid.
Yeah. So
But
stupid.
there's a very easy solution here, and that is that all the court has to do is just rule on the basis of retroactivity or attribution, the due process issues, that the money cannot be attributed to the Moors, and that's it. The transition tax remains intact for corporations, and it helps the Moors. There's a very easy way to thread the needle here. But I mean, in order to think about threading the needle, I think that you have to, have a sense of what this case is really about. I mean, these people like Reich. I mean, what is the man a total idiot or something? I mean, look, quite obviously, the case is about whether this income can be attributed to the individuals who are the Moors. Quite obviously, the case is
Right.
about that. Now it is true that decisions in all cases may have implications, for something else down the road. I mean, that's always true.
Mm.
But my point is, there's an easy way to deal with the situation of individuals that leaves everything else intact if that's what you're trying to do. And the Supreme Court itself seems to be going down the road that it's not a realization issue at all. It's a due process issue, the retroactivity and stuff like that. I mean, I've been saying on the get go, my view of this is that retroactivity is the one issue, it is the main issue, it's the one issue, that allows everybody to kind of claim victory and go home. And
Well, then,
what the court does.
and by the way, so our tone here, and my tone is that of defeat. The decision hasn't come out yet. Probably not going to see it till June. But you know what? We have promoted this case as the most important case the Supreme Court will hear, and I think there's an argument, and I think there's a true argument for it, because once you understand that the true Constitution of the United States is the income tax, that's how it's been going down for the last 100 years. But if the Supreme Court does bring up a due process argument, well, now that is opening the door. That's sort of opening the door to say, wait, the U.S. Constitution might trump the U.S. tax code. That's actually, as I'm listening to you, wait a second, because the Supreme Court decides that due process attaches to the 16th Amendment. Well, wow, the entire tax code now has problems with it as we go through, this is, and just, for those of you who aren't familiar with this argument, the original Income Tax Act of 1913 allowed the Secretary of Treasury to canvass, that's the word is used, to canvass the country to find unreported income. So just go around looking for unreported income anyways, anyhow. There's no way that doesn't violate the Fourth Amendment. I mean, the unreasonable search and seizure. Well, I smell income. Because I smell income, I can go and invest in anything. And that just turns the entire Constitution on its head. So if due process actually attached, the government would lose. It's sort of or the tax system would lose a lot of its force, where we just sort of glaze by everything. And also when it comes to regulation, rule making, the rules are written by the IRS with in contra to what the law actually requires. But then, well, it's the IRS interpreting its own rules, and obviously they know what they're doing, so we'll just go with what the IRS says. So my thinking here is maybe we'll actually see some indication by the Supreme Court that the highest law of the land isn't the U.S. tax code.
Well,
that would be wonderful.
I mean, there's two constitutional issues that were identified, right? There's the 16th Amendment issue.
Yep.
All right. And on that, what I found very, very interesting was that, within 5 minutes of the argument beginning, I believe 2 or 3 of justices, including Justice Roberts, said, "Well, we have realization, okay, from the foreign corporation, etc." So very, very quickly, the court made the distinction between realization issue, 16th Amendment, and I think it was Kavanaugh who talked about well, many of them did, but as an example, Justice Kavanaugh talked about attribution, or perhaps it was Justice Barrett talked about attribution, possibly Sotomayor. Uh, and Kavanaugh talked a little bit about retroactivity. Now, these are due process issues. Let me add also that, as you know, SEAT put in an amicus brief arguing that the MRT, at least as applied to Americans abroad, was discrimination based on nationality, which is a suspect classification under the Equal Protection Clause of the 14th Amendment, right? So, I mean, this is kind of interesting that there's at least a recognition of this. Now, if we go through, see, here's my first point, and I didn't even realize this till yesterday. I found this very difficult to organize my thinking on this, but you know, we have the Ninth Circuit that says, no, realization is not required. Now, if the Supreme Court does, as was suggested by Justice Kavanaugh, let's assume realization so we don't have to deal with the issue. Where does that leave the jurisprudence of the country? Where it leaves us is the Ninth Circuit is the leading case, saying, well, realization is not required. So my first point is, I think the court has to rein that in. Okay. I think the court has to rein that in. So they may well assume that there was realization here. But I'd be surprised if they didn't make some comments in that regard. Because if they don't, if they say, well, we'll assume there's realization, we're just going to look at the attribution issue, they're leaving the Ninth Circuit decision intact, right? And I don't think that they're going to do that. Okay. But we'll see.
Yeah, but it was interesting. And this is what, realization means you actually had the income. That's another way to say you actually had the income. So
Yeah,
what
by
the court say,
realization, I mean
you don't need to have the income to be assessed an income tax.
Yes,
That's
so
really
either have
that's
it
really where
on
we've gotten.
your hands, or you have the ability to push a button and control the disposition of it, something like that. Doesn't quite mean you have to have in your hot little hands.
Yeah, well, yeah, right. You know what? And you brought up this point too. Is like I didn't, your comment here on the kiddie tax, because parents have to are vicariously responsible for the kids.
Yeah, that's kind of interesting.
It's I know, and that's always sort of that's one of the things about our lovely income tax. That's a problem caused by how the tax is written. They don't, our income tax doesn't define individual. So if you're going to file, an individual income tax, well, I could make a bunch of assumptions about, well, what's an individual? It would be somebody who's over the age of 18, who's of sound mind and body, maybe who consents to the taxes. That'd be nice. That would be really nice. But when you leave it open to any interpretations, well, that's where the regulations come in. It's like, well, clearly, by individual, what they meant is a baby. If a baby has income, then obviously that would want to be taxed. And clearly by, an individual means someone in a coma. Somebody in a coma who, I did have a case where the IRS did go ahead and assess 5471 penalties against someone who was in a coma for that year. We were eventually able to get that off, but they were like, oh, well, you were in a coma. And I don't know if that's reasonable cause for not filing your 5471. That's, again, how absurd it is, because the IRS gets to write the law because it is the highest law of the land.
Well,
Again,
Anthony, the issue is, I think, this. All right. So we have a realization issue. Realization does not mean it has to be in your hands, okay, but it clearly means that you have the ability to sort of push a button to get it. You have control over it, etc. Now, what the court appears to have done, and I think uniformly, did not get into the question of whether there's realization at all, realization of income. Now, Andrew Grossman tried to recharacterize it as something other than an income issue, right? In his opening argument, he appears to have not made a lot of headway in that. And then, we have these judges saying, well, there was, the company realized the income, so it's an issue, a due process issue of attribution. Under what circumstances is it reasonable to say, well, this entity might have realized the money, but we're going to tax you on it. Now, the Solicitor General, twice at least, referred to this 1933. Isn't it interesting how everything is so old, right? Not almost 100 years ago, better way to put it. Case of Burnett and Wells, which was really, it was about whether income earned by a trust could be attributed to the settlor of the trust. But I don't think I don't think that's a great case. I don't think there's a great analogy there, uh, et cetera. But the real difference, as Kavanaugh pointed out, is the retroactivity, right? All of these things that these people are talking about are current income. Attributing income currently earned from one person to another.
Yeah, yeah,
And this is not what's going on in this case at all. This is,
yeah.
what this is looking back 31 years of income that was never taxed, all of a sudden deciding that it's taxable income and attributing it to somebody else, right?
Yeah.
And
Well, you know what? And
uh,
onto your next point here. You whether income realized by a non-resident alien can be attributed to a U.S. person, and that's basically what we have. I mean, that's
well,
exactly what we have here. The corporation is a non-resident alien. That's how it would be classified, and can it be attributed to a non-resident
yeah, now
alien?
this is really interesting, Anthony, because let me tell you where this decision is going, and I suggest that we make this the next podcast. So all of these other cases they're citing, I mean, the tax props are shrieking. It's just a shrill shriek. My God, this will
Yeah, I
destroy
know.
the beloved tax system. But all of the examples they're giving, partnership, Chapter S, Subpart F, etc., this all has to do with current income, number one. Other than Subpart F, interestingly, it also has to do, I think this is a very important point, with the attribution of income from one U.S. person to another U.S. person. Okay, one U.S. person to another U.S. person. What's different about this is attribution from a non-resident alien to a U.S. person.
Yeah.
Now, let's say that,
Right.
yeah. Now, here's where I'm going with this, and I believe that this is the next thing that they're going to. I would not put it past them to try this at all. So let's say we have a U.S. person outside the United States who's married to a high income earning non-resident alien.
Yep. Mm-hmm.
What's to
Yep.
stop the Biden administration from saying, well, obviously you as a US person, but because you're married to this non-resident alien, have a close connection to his or her income. And because there's that same close connection that justifies attribution generally, I think what we should do is simply attribute the income of the non-resident alien spouse to the U.S. person for tax purposes.
Mm-hmm. Mm-hmm.
I
Yeah.
would not put this past them at all. And in that context, the next thing they're going to do, is you go to, they're going to, they can easily just create a new section of the Internal Revenue Code 6039. I don't know what it would be, G or something. And next one, what we're going to call it is the Foreign Spouse Information Return.
Yep.
You have to
Mm-hmm.
file a
Mm-hmm.
disclosure every year
Mm-hmm.
if you're married to a
Yes.
non-resident alien for the
Mm-hmm.
purpose of allowing the attribution. But I mean, look, I'm sure some people say, "No, John, that's crazy. That would
No,
never."
it's not. No, it's not. No, no, you're right. You got it.
But my point is, this is absolutely the logical extension of attributing the income of the foreign corporation to the U.S. person. They are both instances of attributing income from a
Yes.
realized by a non
And
alien that they don't have the right to tax to a U.S. person who they do.
exactly. And they laid the groundwork for it because there's
Absolutely.
no unlimited gifting between a non-US spouse to US spouse. So, you say, hey, look, you're living high in the hog over there.
The other way around to it from a
I'm sorry, the other way around. Yeah, right. So, I mean, it's, you really can see it. Hey, look, these spouses are really escaping U.S. taxation because they're living high in the hog and not paying their fair share to the U.S. government. I totally could see it coming. I
I
totally
think
could
it's
see that stuff.
inevitable. I think it's inevitable because one of the interesting things about the decision is that at the beginning, Justice Kagan and the Solicitor General both had some very, very negative things to say about foreign corporations.
Mm.
These were about fraud and all this sort of stuff. I mean, it's simply beyond these people that somebody might want to carry on business in a place outside. That just doesn't accuse, like their brain short circuit. If that concept is introduced, right? But I mean, make no mistake, we're dealing with a presumption of hatred of the foreign. Now, another very interesting question, right? And this has to attribution. The Internal Revenue Code, as you know, defines a U.S. shareholder as a 10% interest in a foreign corporation, and that's the necessary but not sufficient condition for income attribution from the corporation to the shareholder. But Justice Barrett, in questioning, identified that as a due process issue. Why 10%? I mean, that doesn't give you control, right?
Yeah.
It'll be very interesting to see what the court says about that particular issue. I mean, that's kind of a sleeper issue, right? But it may open the door, to arguing not that subpart F per se is unconstitutional, but that the attribution with only 10% share ownership might be unconstitutional, right?
Right. Actually, you know what? I actually kind of agree with you. This could be a sleeper issue because if the situation was where they did have actual control, then you're in the position like, well, look, they're just they didn't make the distribution that they could have. But this is a situation where they have, and everyone agrees they have no ability to force any distribution to themselves. They have none. So that could be another way, a quick thing she asked. And because, yeah, I could see that. It's like, well, if in order to attribute this, we actually need a controlled foreign corporation and a 10% ownership of it. When you actually can't control the foreign owner corporation, then you don't control it.
Well,
That's not controlled.
Between saying that you need more than 50% U.S. ownership for it to be a CFC, and saying the definition of U.S. shareholders 10% ownership. Now,
Yeah.
Now this was Justice Barrett right at the beginning who used the language: "Isn't the issue is it fair to attribute the income from the corporation to the Moors?" Now, in addition to that, later on, in dialogue with the Solicitor General, Justice Barrett raised that issue again and specifically asked the Solicitor General why 10%, right? Or, what was the amount of ownership that would allow this? And the Solicitor General just said, well, it's always been 10%. I mean, there was no, sort of a historical thing, but there was no development of that issue. And it seems to me that that's an issue that might reasonably be developed down the road. I mean, think about it.
Yeah.
That's not a very high stake at all. And if you don't know the other, because remember the definition of controlled corporation be 50% U.S. Shareholders, but what if they don't know each other? Right.
Right. There's no, right. They can't work in concert, so they actually don't control, and they don't even know. And I mean, you could have a situation where, multiple people don't know there's other shareholders. And so multiple 54, you can use the same 5471, but if you don't know someone else filed one.
Well, you could imagine, at the end of the year, a foreign corporation sending a notice to U.S. persons. We have confirmation that this is a CFC under U.S. legislation, but domestic law prohibits us from revealing the identity of the other shareholders. Think of it.
Yeah.
I mean, it's quite interesting. Now,
one thing, the something that sort of caught me during oral argument was how fired up Justice Kagan and Sotomayor were. I've watched some oral argument before. I can't say I'm I spend too much time doing that, but their engagement in this case was. And I guess I shouldn't have been surprised, because if the true income tax, or the true Constitution of the United States of America, is the income tax, and the income tax is supported by the largest government advocates like Kagan and Sotomayor, then I shouldn't be surprised. I mean, they were ready. They were locked and loaded for oral argument. They were like, this was their case. That's what I would say. By their engagement, it proves our point that this was probably the most important case the Supreme Court will decide ever.
Yeah, I agree with you. Actually, I was surprised at the overall level of preparation of all.
Right. Right.
I think they were far better prepared than the lawyers, right?
So right, we shouldn't have been, because we've been saying this. So their level of preparation, what was I was exactly in accord with what we've been saying. This is the most important case they're going to be deciding.
Oh yeah, for
And
sure.
Sotomayor, as much as I didn't like what she was saying, she had her arguments. They were good. I mean, I disagree with everything she said. But she had the whole thing going there. She was well prepared for this case. Incredibly well prepared, as is Justice Kagan.
Well, I saw my arm more than Justice Kagan, but yeah, I mean, I agree with you. I was surprised and impressed by what I perceived to be a very high level of preparation by the judges. But usually you would expect the lawyers to be more on top of the case than the judges, but I didn't see it this way.
Yeah. Yeah, and maybe they didn't see and that, as if the attorneys didn't understand the importance of this case. They
No,
themselves didn't.
I think they understood the importance, but I think the problem with see, remember, we can't lose sight of the question that the court was there to deal with, right? Was just whether income under the 16th Amendment requires realization. Now, the Moore case is
Yeah.
the case that managed to drive that question up to the Supreme Court, but uh, from the point of view of the lawyers, they were dealing with the question asked by the court more, obviously, and not the Moors. I mean, I was going to say more than the Moors. How about not the Moors at all?
Yeah.
Uh,
So we went over the retroactivity, and you've pointed out previously, hey, look, a little bit of retroactivity is okay. That if you make a law retroactive to the earlier in the year, so it's the entire law for the year, that's fine. But in this case, we're not talking about earlier in the year or even earlier in the prior year. We're talking 31 years ago.
mhm.
And that's really and that was the problem. And this was the most aggravating part of the oral argument, was the constant conflation of subpart F with the MRT. Constantly, subpart F was a tax
Yeah,
on current income,
Anthony, on that,
and it was
yeah, I mean, this is quite interesting because I remember reading something at some point, when it became clear that there was going to be some kind of, tax on these, what they call deferred earnings, which are not deferred, they're just things that weren't taxed. But there
right,
was discussion of how to do it. Should it go
right,
under subpart F or not? I think it's worth pointing out that by definition, in the subpart F rules, subpart F is restricted to current earnings. I mean, that's the definition of it,
right,
right?
right.
So for them to be talking about, well, isn't this just subpart F? Well, no, it's not subpart F, because subpart F is restricted to current earnings, first of all. And secondly, again and again and again, you want an easy distinction here? No problem. This is retroactive. All these other things you're talking about are attribution of current earnings. I mean, that's all you need. Okay.
Right, right.
That's all you need. Now, on the retroactivity issue, um, look, again, who am I? A nobody, right? But I really must say that, in my view, they're all misreading the Carlton standard. For a lot of reasons. I mean, I wrote an extensive post on this, and there's even something from the congressional research people that I think we may have talked about this. Even the government's view is that in certain circumstances, retroactivity may be fatal to the legislation. And interestingly, in Carlton, which is generally cited as the case that retroactivity is all good, doesn't matter, there is a concurring opinion by the late Justice O'Connor, who, clearly says, well, this is all well and good, but we have never said that you can make up a new tax and apply it retroactively for many years. And I think that I don't think the Carlton case, if you really get into it, really stands for the proposition that all things retroactive are fine. But this is I mean, it's quite obvious that the retroactivity issue is, nobody did a really deep dive into that, I think.
Yeah. And here's a comment for Suzanne here. I view this case as either one that will close the door until a workaround is found, or open it up wide to go just beyond those abroad. Yeah, yeah, and I think that's what it is, and that's why we're saying, this is the most, important case because because the Supreme Court is in a situation where they decided to make a decision. They didn't have to hear this case. They could have let the Ninth Circuit be the law of the land.
Well, Anthony, this is the problem. They can't do that because this is why I think they have
Right.
to do
Yeah,
something.
right. Yeah.
Now, you let the Ninth Circuit. I mean, look at what the damn thing said. It said
Right.
it's
Yeah.
not necessary at all. That opens the door to everything the government wants.
Right. So they had to decide it. So now the Supreme Court is in a situation, and if the government doesn't get everything it wants, that means there's some limitation. And you have a government that has had to deal with no limitations. Whatever we want goes. Whatever we say is. And now, for the first time, they have to confront an actual limitation. Well, they've been running hog wild for so many years. They're deathly afraid that everything else that they've been doing will come to scrutiny, and there might be significant problems with it. And this is one of the, we've seen this before, and this is where I was really having a hard time controlling my emotions as the government was going on to say, well, here's our argument, Your Honor. A subpart F has been awful and unconstitutional for so many years, and we've allowed it to stand. So really, what's the prohibition against the MRT? Subpart F is awful and unconstitutional, so therefore, we have to be consistent with our previous rulings and allow this abomination to go on because subpart F has been allowed to, because this.
Yeah, it's
this
sort
court,
of like an adverse possession argument in property.
yeah, there you go. We have adversely possessed the law, and we've built all these structures around our adverse possession. So if you rule that we actually don't own this, our system collapses upon itself, unleashing a whole bunch of challenges from taxpayers and their awesome attorneys, along with us having to do a whole bunch of work. They have to do a whole bunch of work and redesign everything. All their training units that they have out there about how to hit people with income they've never received. Everything that they have, their whole world is bought. The IRS's whole world is built around things that they were given to by the court that actually might not be there and could be pulled back by the Supreme Court, relieving, a cascading result of consequences. If this due process argument, as we said earlier in this episode today, if this due process argument is put down in any sort of way, that is giving an opening up at a door for a whole bunch more due process arguments, which are sorely needed because due process, as we've been saying, is severely lacking when it comes to taxes.
Well, you know what Justice Alito's comment, right? I mean, Justice Alito, both Alito and Gorsuch had very sort of extensive discussion with the Solicitor General, right? But I mean, Justice Alito's comment, when the Solicitor General said very, very clearly that we regard attribution and retroactivity as due process issues, okay, not 16th Amendment issues. Justice Alito said, all right, well, then isn't the appropriate standard rational basis, meaning, no protection at all? Right? I mean, so I mean, he called it an economic regulation. Now that could easily be understood to be the law, but I think it might also open the door to reconsidering, what should be the standard for this type of thing.
Well, I can maybe this is where he's going, is because, well, look, your rational basis review comes from the Interstate Commerce Clause. That's really where you get your economic regulations. And hey, look, as long as your economic regulation, which the power by which comes from the Commerce Clause, satisfies rational basis, it's constitutional. Well, this is a power coming from the 16th Amendment. So we really can't say it's if there was no 16th Amendment, maybe you could make the claim that it's an economic regulation, but it's not. It's something that the government says, oh, no, we have the right to do this because of the 16th Amendment. So, well, it's no longer an economic regulation. It's pulled out of that because it's a power from the 16th Amendment that didn't exist in the original Constitution.
That's an interesting argument. I mean, you may very well be right on that. But here's the thing, right? No matter how this is dressed up, both Justices Gorsuch and Alito at various times said to the Solicitor General, well, it sounds to me as though there's no limitation on the taxing authority the way you're describing it. The Solicitor General said, yes, that's exactly right. There
Yeah,
is no
yeah.
limitation on the taxing authority.
She
In
said
fact,
it.
we can tax people just for existing. Right. And this is what I think it's possible to uphold the transition tax, but still come down with a ruling that says, no, this is not unlimited. I mean, you could uphold the transition tax, as crazy as it is, by at least giving reasons why it's not unconstitutional. But that doesn't mean there aren't other things that could not be constitutional. Right.
Right.
I've already made the point that, and again, this is not well enough developed, but I think there's a huge difference between looking at two U.S. person taxpayers and attributing the income from one U.S. person taxpayer to another. There's a huge difference between that and saying, well, here now we have income realized by a non-resident alien who we don't have the right to tax. So what we're going to do is we're going to attribute that income, the U.S. person. I think there is a difference. I mean, maybe at the end of the day, the decision is it's okay to do that because, Justice Kagan, the Solicitor General's hatred of all things foreign. Or maybe they think, that's all the more reason to attribute it because it's foreign. I don't know. But, there
Yeah.
is that distinction there.
Yeah, it would be something, and just sort of what came into my mind, as we're talking about due process. It's hard for me, the door is open to due process a little bit. The next phrase that I think of due process is equal protection. Due process and equal protection
Well, equal
go
protection,
hand in hand.
it's all part of the 14th Amendment stuff, right? And interestingly, under equal protection law, suspect classifications include classifications based on nationality. So, as the seat brief points out, right, so you have the U.S. looking outside the country to attribute earnings of a non resident alien. You say, well, who are the people to whom the earnings are attributed is based on a nationality distinction, not on anything else, and therefore perhaps should be unconstitutional. I mean, my answer to that is I think that's a very, very good argument. And if I were the Biden administration, I would recognize that argument and I would say, well, obviously, what we need to do then is decree that the income of all non resident aliens is taxable by the United States so it no longer discriminates based on nationality. I mean, go ahead, let them do that next. I mean, they're
Right.
so batshit crazy. Nothing would surprise me.
Well, right. And this didn't surprise me. And actually, I think this surprises nobody. But I think it needs something to be pointed out that this is a tax law signed by President Donald J. Trump. This is purely a Republican tax bill. I don't believe there was one Democrat who voted for the Tax Cuts and Jobs Act. This is 100% Donald Trump and a product of MAGA Republicans who, from my understanding, the Democrats are firmly set against and say they're terrorists. MAGA is terrorists, basically. They are coming out and saying that Donald Trump shouldn't be able to run for office. He's an insurrectionist. He's terrible. He's awful. He's the worst human being. We want him behind bars, possibly executed. Yet here they are.
Anthony,
They are.
It's a question of a
Here
hierarchy.
they are.
Right. The Democrats will always be in favor of anything that confiscates the assets of the individual.
And
as basically the number one principle.
And they're rallying around Donald Trump's tax bill.
Well, that's because it's more important that the individuals get their assets confiscated than hating the Republicans, right?
Yeah. Exactly. Yeah, that's exactly. Here's a good analogy. Melvin has. Good morning to you, Melvin. Thanks for joining us. Imagine Germany taxing the income of a U.S. corp because a long-term German currently resides in the U.S. and has a couple shares in the corporation. That's a fair analogy. That's totally what's going on here.
Oh, that means reality though. Germany does have a certain level of CFC rules. Okay. I wouldn't be too quick. I don't think it would be as blatant as this, but I wouldn't be too quick to dismiss this, right? See, the history of these CFC rules is the U.S. was the first in as being the most sort of obnoxious taxing authority in the history of the world, and other countries have followed, right?
Yeah. That's exactly, I mean, they just want, that's just pure theft this has just been a slow erosion to pure outright confiscation. And as we hear, hey, we need to finally get billionaires, right? With the new billionaire tax. Remember, folks, the original income tax in 1913 was only went after the truly wealthy. It was like, oh, it's only going to be a 2% tax on the truly wealthy. And after we tax these, we'll have enough money for every social program. We'll have utopia with just this 2% tax on it. Hey, then the next thing you know, the next thing you know, it's poor people who are audited the most by the IRS. Oh, that was quick. But now, hey, look, we're going to get those billionaires for sure this time. Somehow we missed them. Somehow we missed them, but just
All one
trust
needs
us.
to do, Anthony, is
We'll
look
get
at
them.
the Wyden Green book, and this Wyden proposal is just the Biden Green book. With a suggestion to start with the billionaires. There's no question.
Yeah. So,
Back to the issues. So analytically, I mean, if anybody's interested, I think here's how you have to look at this. All right, because there's so much going on that this is the best I can do, and if you had to try to explain to somebody what the moving parts are here, okay? Okay, understanding the issues. Well, we know. Just keep scrolling down
yeah,
here. Here it is. Oh yeah, here's this
yeah.
Solicitor General. We can tax people just for existing.
Here you go. Yeah.
Then let's see. Hold on a minute. During the question, yeah. Now this is important, right? Alito, Gorsuch, and Thomas questioned the Solicitor General about this, and Thomas went further, right? Twice. In fact, that was one of his first questions. Thomas went further and asking, well, what about could they tax the increase in the value of real estate or something like that?
Yeah. And he leaded, and then he was quiet for a long time. He had that first thing about real estate, and then he was just quiet. And that was a question I'm like, and I'm still that surprised me. And then, that's like, well, are they trying to lay a groundwork? Well, your real estate increased in value. Yeah, I know you didn't sell it, but it did increase in value, and you're deferring that income. That's really deferral because you decided not to sell your house, so you've been deferring this income. So it's only fair if we get the increase in the value of your house. That's probably caused by inflation by the Federal Reserve, which we never audit or control, and which we exempt from taxation. So you have this thing where you're taxed on your phony gains. Why not? Why not?
Who call this deferred income? I think they're just outright lying.
Yeah.
Okay, they're outright lying. It's
Yeah.
their view is that anything that isn't subject to current taxation is deferred, and this was not subject to taxation. Period. This is not deferred. This is just income that wasn't taxed. But anyway, so the Solicitor General, we're the government. We can do anything. Okay, including now. She went further. She said, not only can we tax the increase in the value of an investment portfolio, but we always could do it. Then she goes on,
Amazing. Yeah.
down,
You're amazing. Yeah.
taxing people for existing. Then I just find it so disingenuous. She's sitting there saying, oh, it's so unlikely we would do this. Yet 5 days earlier. I mean, like, what planet does this woman live on?
Oh, poor thing. I wonder if she believes. I wonder if she might have actually believed it. Who knows? Oh, poor thing. Yeah, poor thing.
Anyway, continue.
Oh God, yeah. Well, you could trust us. You could trust us to be fair.
We're the government. We're here.
We're the government. Says the person tried to tax you for income you've never received nor ever could receive, or it's right, yeah. And Melvin, thank you for bringing this comment. You're absolutely right. That's right. That's what she said. It was just really, it was a practicality of administration. That's really the reason why they haven't always, that's why they've only taxed realized income, because, well, it's really impractical to tax unrealized income because it's fictional.
Well, remember what
I'd say, number one, because it doesn't exist. There's no such thing as unrealized income.
Yeah,
it's either income or not.
So they're pretty clever in Congress, right? I mean,
yeah, they're yeah. Oh yeah, they're clever, all right.
I mean, the woman's completely out of her mind.
Yeah,
Okay.
right. So here it is. She said it was also unlikely that taxes would be imposed in the absence of a sale of assets, and maybe that goes to maybe that's going to Justice Thomas's point. Because if we're talking about real estate, that's oftentimes the largest asset of many people. And there it is, Ron Wyden, Billionaires Tax Act. I'm sure, and of course he's
at the mouth.
Yeah, foaming at the mouth, and it just happens to get a whole bunch of donations from billionaires to write something against their interests, which I doubt. I doubt it actually is. Rather, it's punishing those who are a threat to billionaires, which is what Congress is great at. It's great at if you are wealthy, you're in great shape, no worries. If you're trying to get wealthy, well, you got a few things against you, like the entire government. And Ron Wyden, I mean, really, wow. I'm not going to say anything more. Let's just move on from that about Ron Wyden.
And we talked about,
There you go. Right, and this is exactly. Could the government impose an annual capital gains tax based on only the increase in the value of your home? Well, and this is what I would say. What if your value of your home goes down, though? Will they give you the loss?
of course not.
It goes one way.
I mean,
we're gonna hey, you had income on this day. Okay, you had a bunch of losses, but you had income on this day. We'll just tax you for the day you had income.
You can't take personal use losses, right? But they can tax personal use gains.
Yeah, that's fascinating.
No problem with that. I mean,
right, no problem
behind it.
Right. I mean, and right, this asymmetrical definition of income. I mean, that's really a huge problem. It's asymmetrical. Well, any income you have, we'll tax. Any losses we won't give you. Well, we may give you some, but they're going to be limited on stuff because, well, look, we need the money. We want the money. We are so greedy for the money. We will do anything for the money, said the Solicitor General. That is what she said. This is my thought as we're talking about this, by the way, and this is a slight aside, and we do need to wrap up on time here. As we're talking to all these people, all these highfalutin people going into Congress and talking about this and that, about how things should be and whatnot. These are people who are totally divorced from the administration of this abomination. They're totally divorced from it, and they outsource it, and they let the IRS do the dirty work. A lot of our problems could be solved very easily if we required everyone in Congress, everyone who worked for the government, to volunteer 1 week a year working at the IRS, handling phone calls. A lot of this could be solved. And you know what? It's so easy to say, hey, let's go seize somebody else's money. Well, why don't you do this? Why don't you be the person to go there and demand it with a gun? Why don't you be the person to say, hey, look, I'm going to look you in the eyes and I'm going to take your money because we need it. Why are we laundering? Why do we allow Congress and this government to launder violence, their violence, through other people, such as government employees, and then they just can get to wash their hands of what they did? They just, no, they're not there. They were just giving orders, and that's just truly obnoxious. And why, we have this elite who doesn't want to ever do the dirty work. They never have to do the dirty work. That's for people. That's for government employees. I think that would cure a lot of ills if we actually required, and if we also required every congressperson to file their own returns without the use of a tax preparer. They themselves have to do it by hand. They could use a calculator. We'll let them do that. That would solve a lot of issues. We are wrapping up on time, though, so I do want to cover.
Just keep scrolling, and I'll just talk through the points. Right? I've talked about C, which was the issue. There's a difference between attribution of income from one U.S. person to the other. There's some examples. D, I'm raising the question of, well, what happens if it's attribution from a non-resident alien to a U.S. person? I think there's something different here going on. I mean, the government may deny it, but I mean, the difference is that in the first case, the attribution is with respect to income that the government has the jurisdiction to tax. In the second case, the attribution is with respect to stuff the government does not have the jurisdiction to tax, right? It's essentially the creation of jurisdiction to tax. Actually, write this down. I think it should be added.
Okay.
It's the creation of the jurisdiction to tax where it doesn't exist, right? That would be, I think, a good addition to point D. And let's see, taxation based on non-U.S. Well, I've talked about that, right? And this is where I could easily imagine this going with Americans abroad. You have a foreign spouse. Well, they have income. So we're going to attribute that income. We can't tax them directly, but they're a non-resident alien. We're going to attribute their income to you, and you pay the tax. Thank you very much. Right? I mean, that would be completely consistent with the U.S. view that the only reason somebody marries a non-citizen is tax evasion, right?
Mm-hmm. Yep, exactly.
Now, on the final frontier, but let's pause for a minute. Let's pause and let me introduce this. The final frontier. These are the voyages of the Starship Enterprise. Here's the end game here. So far, we've been talking about attributing realized income from a non-resident alien, realized income to the U.S. person. But what about if you agree that realization just means control, meaning that you could have sold it, but you didn't? What about for Americans abroad going out? Same situation. You live in a house owned by a non-resident alien that has not been sold for 100 years. We're going to deem realization there. We're going to deem realization.
Yeah,
Even
exactly.
though
Yeah.
now we're going to attribute the deemed realization to you.
Yeah.
That's
Exactly.
the final frontier.
Yeah. Yep. Yep. Exactly. That's where that, and then, that would make sense of why Justice Thomas asked that question at the beginning.
Well, I think, that's right, because what he's really getting at is, I mean, there's one thing to attribute income. The issue of attributing income where there's actual realization is one thing, but the issue of claiming there's realization only because of control of an asset that you could sell and therefore deeming it to be realization and then attributing to somebody else is entirely another. And so my point, Anthony, is this. When we started talking about Moore, I made a simple statement. I said, this is the most important case court has ever heard. And I also said that unless this is overturned, the result will be there's absolutely no limit to U.S. taxation. It's just pure confiscation.
Whatever they want.
And after having gone through all this and seeing it again, I'm perfectly happy to commit to that. The court has got to do something. They cannot leave that Ninth Circuit opinion where no realization is required. They cannot leave that dangling, because no realization is not the same as constructive realization. It's not the same as realization if you have a certain degree of control. That says no realization.
No realization. Yeah, that's where we're at. That's where
that stand.
That is where we are right now. Well, this is, hey, look, this is to be continued, right? We'll be covering more of this as things develop. I just want to, this is, Suzanne has some comments here that I think would be great to conclude with here. Let me get these up here. Suzanne, this is, there will be carve out loopholes in place. They must protect their donors. And exactly. When we see Elizabeth Warren, who, by the way, as Suzanne correctly notices, wow. I did see that. I saw that today. The net worth of Elizabeth Warren, who's demanding more and more of these wealth taxes, is somewhere in the hundreds of, was it $70 million? And I believe her salary each year is about $246,000.
I thought it was more like.
Oh no, she's substantially wealthy. So you got to wonder how these people get there.
Husband, right? Maybe they're attributing her husband's.
Yeah, right. I don't know. Well, they should. Yeah. But it's like, this is really the thing. Our government is our outright enemy here with the Supreme.
Anthony, it's very, very clear that the fault line in Moore is very, very simple. And it's this: can the government confiscate anything, or are there limits on what the government can confiscate? That's all this case is about.
Very well said, John. I agree with you. Well, thanks everyone for joining. Thanks for your comments. We really appreciate it. We'll be discussing this more in the future. Sorry about that. Puns are the worst form of speech. I know. This is, and I want to just thank John, and Keith wasn't able to join us this morning, but we will be having some more content on this coming up. Really appreciate everyone participating. And I would say this, we have some real great commenters who are truly informed on the issues. We really appreciate that, helping us see things that we're not seeing. So really appreciate everyone chiming in and helping us direct the conversation with some incredible insight. Again, I want to thank John for his hard work on doing this, his passion for it, which he clearly has, the passion for protecting human rights, as do I, as we see that the greatest threat to our freedom, our peace of mind, is our own government. And the greatest tool the government does to subjugate us is the U.S. income tax, which is the true Constitution of America. There is a chance the Supreme Court will disagree when it releases its opinions. We're going to pray and hope for that.
They can't leave the Ninth Circuit decision dangling out there in space. I don't think they can do that.
Yeah, you're right. That can't happen. Now, if you are thinking, as we're seeing, a lot of people are looking to renounce. We understand that. If that's something that you're thinking about, you can reach out to John at citizenshipsolutions@protonmail.com. And if you are thinking of, my name is Anthony Parent. If you do have any comments, anything you want to leave to me, any topics you want to discuss, or perhaps you think you'd be a fantastic guest on this podcast, please email me at aparent@irsmedic.com. This is Anthony Parent for John Richardson. We want to thank you I want to thank you for watching, and be sure to subscribe. Turn on those notifications so you know when we are going live so you can participate. I want to thank everybody. Thanks again.